Hello everyone, and thanks for tuning into the Financial Investor channel. My name is Brent, and today we're going to be covering the topic of signing up for M1 Finance. So I was looking for a platform that my wife could begin using to create her Roth IRA. I wanted to create a retirement account for her, so I had looked at Fidelity, Vanguard, TD Ameritrade, Charles Schwab. I looked at my Merrill Edge, but a lot of them had minimum deposits, or they were commissions. And I was trying to look for the best platform. You could buy ETFs. Say on Vanguard, you could buy some Vanguard ETFs free, but they do have expense ratios. TD Ameritrade had a variety of like iShares and different ETFs, but a lot of them had minimum balances, and some of them had fees or expense ratios. So I wanted to kind of look around a little bit further, and I waited until M1 Finance recently removed their fee. So we will be covering the M1 Finance app, the sign up process, and why I believe M1 Finance could be the very best app for new investors. So here we are, we're going to be signing up for our M1 Finance. Now I'm going ahead and continuing to use the chalkboard background. I kind of like this format. If you guys have a preference, whether going in the PowerPoint with the white chalkboard or the whiteboard, or going over an article on my website, go ahead and let me know on the comments below. So I'm going to list off 6 reasons, or this is all information that's on their website. I pulled off the most relevant information to kind of let you guys take a look at. So number 1, it's a very powerful solution. Why? M1 Finance gives you the ability to buy partial shares. Whether you're investing with $100, $500, or $1,000, your $100 could be put towards Amazon, Google, and say Boeing. All of these companies are priced at over $200, but with $100 you could buy partial shares of all 3 inside your portfolio. Number 2, or still on number 1, it's free of commissions and fees. It's similar to Robinhood. Robinhood has no commission. M1 Finance has no commission. They just got rid of their fees. Their fees were like 0.25 for the year if you had less than $5,000 invested. So 0.25 of 1,000 would be $2.50 per year for that 1,000, or if per quarter or per month it was like 20 cents per month, which would add up to $2.50 over the year. They got rid of all that, so this means it's a great platform for new investors beginning with $50, $100, $1,000. It doesn't matter because it's completely commission free and you can buy partial shares. Number 2, you can create retirement accounts. Again, I wanted to create my wife a Roth IRA to begin her investment journey because I want to tax shelter her capital gains, her dividends, her interest. I don't want to worry about having to pay taxes on it, in the following years. I don't want to have to babysit the fund. I'm going to try and buy some blue chip companies that don't have, she can buy and hold them for the long term, reinvest money monthly. It'll buy partial shares. It automatically does rebalancing. If we take a look at number 5, so I wanted to create her a Roth IRA inside a retirement account, and M1 Finance lets me do that. Number 3, it lets you grow your savings over time because you've created your Roth IRA. This allows you to grow your retirement a lot faster because you're not having to pay taxes on your capital gains. You're not having to pay taxes on your dividends. You're not having to pay taxes on your interest. All that money is being reinvested back into your Roth IRA. And we've never covered IRAs or Roth IRAs. We have covered 401ks and Roth 401ks. I will be making some videos covering IRAs and Roth IRAs. I believe that's a very good video. So look forward to that. Number 4, if you're buying partial shares, if you have $100 and you're buying 3 stocks with it, say you bought Amazon, Google, those are both of those stocks are over $1,000, and you bought Boeing, you would buy 33% of Amazon, 33% of Google, and 34% of Boeing for a total percentage of 100, and your $100 would go towards that money. So you'd own like $33 of Amazon, $33 of Google, and $34 of Boeing. As you add money into your portfolio, it would automatically rebalance to how you want the specific account to be balanced. So if you want 30% of your money to be in the stock. When you put more money into there, or if the dividends are deposited into the M1 account, those deposits here go directly, they fund the underweighted slices. So if you're sitting at 34% on Boeing, 33 and 33 on Amazon and Google, it'll split up between Google and Amazon, and then all three of them will have 34% now. And then as you continue to funnel money in, or if you're getting paid dividends, it'll continue to kind of increase those pie levels at the needed levels. And it looks like they do some sort of tax minimization, so it uses a lot allocation strategy when selling securities to help reduce the amount owed on taxes automatically. But I'm going to be creating a Roth IRA in an upcoming video, and you're going to see that whole process, and I'm not going to have to worry about paying taxes on my wife's account, because all of those capital gains, all of those dividends and interest will be tax sheltered until she's 59 and a half. Or if she wants to withdraw her contributions that she's made to the Roth IRA, she can do that with no penalties. It's at no fault to her. So Roth IRAs, you can always withdraw the money that you've deposited into it, that you've contributed towards it, but you cannot pull your capital gains, your dividends, or the interest until 59 and a half without receiving a 10% penalty. And you have to have the account, the Roth IRA, active at least 5 years before you're able to withdraw the capital gains, the dividends, and the interest. That means if you made it at, say, 56, you would have to wait until 60. You made it at 56, so you'd have to wait until you're 56. You'd have to wait till you're 61 and a half to begin withdrawing those contributions tax-free, or you would have that penalty. So that's a very quick snippet of what's a Roth IRA, and some of the you can always withdraw your contributions. So I think Roth IRAs are amazing. So now we're going to be going over the sign-up process. So I went over to the m1finance.com website, clicked on Invest Now. You can see I selected them both with the little red icon there. You then enter your email address at whatever your extension is at gmail.com. You then enter your password. I use M1 Finance. Yes, this isn't my real password. And then you click sign up. Once you've done that, you're going to go through a few screens. You're going to go over what's next. You're going to start here. You're going to hit continue. It's going to tell you about building your portfolio. It's going to show you how you can design your portfolio. You can either buy like an ETF that's moderately aggressive. So you can buy like multiple ETFs. So this one has moderately aggressive and tech pies at number 2 with Amazon and Facebook. And then it kind of continues to, you can choose to slice your M1 expert pies designed for specific goals like retirement or general investing. Or you can also add any stocks or ETFs from the New York Stock Exchange or the NASDAQ as a slice of your portfolio. And in the end here, number 5, you would end up with your very own personalized portfolio however you want, and you can even add custom pies to it. Now let's go ahead and begin building your very own M1 portfolio. So I've used a I've used a platform like this in the past that offered partial shares. It was Motif Investing, but it was super expensive. I was paying $10 a month. I mean, it's not super expensive. It was $10 a month. I could have unlimited trades after hours. So for $10 a month, I could put in, if I wanted to buy partial shares. That's how I got started in the stock market back in 2015. I bought an e-commerce Motif, which had a bunch of e-commerce stocks such as Amazon, Alibaba, and a whole bunch of other ones. So that's how I got started on Motif, and then I recently switched over to Robinhood in 2017, and then over to Merrill Edge. I'm opening up M1 Finance because I think partial shares are great for new investors, because that gives you the ability to invest your full amount that you're willing to invest into something. It's not money sitting in your account that you're not able to invest. If you have $5, you can't buy Ford or Facebook or Amazon because those are way out of your league. But with partial shares, you can own a piece of that company and you're not having money just sitting on the sidelines. So next we would hit get started. Once you've done that, it's going to go ahead and start you off at your expert pies. Now these are pies that you can select. You can do your general investing, which it kind of gives you a breakdown of what these are considered. These are just pies for the ideals of who want a broad market exposure at a low cost. So these might be like the S&P 500 ETFs. It goes over income earners. We have just stocks and bonds, plan for retirement, the hedge fund followers, the other strategies, the responsible investing, and we have industries and sectors. So you can start off by using some of their expert pies, or you can take a look at your own pies. You can go to build your own pie. So if you click on your own pies, you can see that you haven't built any pies yet, but if you click over on funds, you can begin to add different funds to your pie. So here we have a whole bunch of funds here. You can sort it by the minimum or the maximum of the total asset. So if you're looking for an ETF with a very high market cap, you could definitely look for the market cap there in the billions. Billions would be very nice for brand new investors. You can look for dividend yields. So look for dividend yield ETFs with say a minimum of 2 to 5% to kind of keep it somewhat safe. And then you could look for an expense ratio. So a lot of the Vanguard ones, they offer expense ratios of 0.02%, whereas some of the specific ones to a specific sector may have higher expense ratios in the 0.40s or somewhere in that range. So you can put in a max expense ratio that you'd like to look for. You can also select categories of alternatives, asset allocations, bonds, commodities, currencies, equities, and industries. So you can look for a whole ton of funds on here. And that's why I think it's great. You're not just stuck, it's similar to Robinhood. You can buy funds or stocks again, but being commission free and being able to buy partial shares, that means that you can put in $100 and you're going to get $100 of a fund or $100 of a stock. Now you can do the exact same thing over here. If you click on stocks, you can go over the exact same thing on the right hand side. You can put in your market capitalization, you can put in your PE ratio, your dividend yield. So you can look for a PE ratio of less than say 20. You can look for a market capitalization of in the billions. You want the minimum at say 1 billion. Look for whatever your preference is. Dividend yields again between 2 and 5 to kind of keep it safe. And then you could begin to look through each sector and find stocks that you believe in each of the sectors. That way you're diversified. There's so many opinions out there about what level of diversification you should be working with. Some investors out there, they don't believe, they believe that 5 to 9 stocks is a good investment no matter how much money you have invested, whereas others will say if you have $50,000 or more, 15 stocks is good, and they keep them at a 6.6% ratio. Other investors like 2 to 4 stocks per $10,000. So it's really up to you. As a brand new investor with any less than, say, if you're investing $5,500 in your very first year, I wouldn't go more than say 3 to 5 stocks just to kind of keep it simple. You're getting some diversification. I would select different sectors, or better yet, you can choose yourself an ETF fund such as the SPDR, which follows the S&P 500. So do your research as to what specific funds you're going to go with. That is up to you guys. And of course, if you want to do some research on there, they do offer the ability to type in a ticker symbol. They give you the graph view, so you can look at the 1 day, 5 day, 1 month, 3 month, 6 month, 1 year, 3 year, and 5 year graphs, and kind of show them. There's other websites that provide a little bit more information. You can see here the market cap is at 229 billion. This is Procter & Gamble. This is one I don't currently own, but I think for my wife, I think it would be a good stock for the long term. She's probably going to be starting off her Roth IRA, just maxing it out early this year and getting it started. That way she can begin to get dividends built into the year and reinvest those dividends at partial shares, which would be fully invested in the stock market. And here we can see that they recently took a dip towards the end of the day, so this could be a good opportunity to buy. But PE ratio shown at the top here, dividend yield shows at the top. We can see that the number of employees that this company currently has, the shares outstanding, and their current earnings per share. We can also see the news here. I like this. I like that they provide their news. Hold on one second. I have to cough. Where's my... Okay, there we go. I had a cough. I'm still getting over my cough and sinuses, so let's see here. So it's pretty reasonable here to do your own kind of research. Of course, I would always recommend doing research on multiple websites, and they do have a pretty decent amount of information, such as the PE ratio, the market cap, the dividend yield, the 52-week range here. So their bottom for 52 weeks is 83.24. Their 52-week high is 94.67. They have the 1-year increase so far. Like 2017, they went up over 10%. Their 3-year annualized, their 5-year annualized, and a little bit about their company here, and then the news. And you can kind of expand this more. You can click down here on see more, and you can see a bunch of information. You can see that they're recently on the news. So I think that's great. This is some good information. This is much more information than what Robinhood provides. This is more information than what my other investment brokers used to do with motive investing. So this one is definitely one of the better applications that I've seen that's free, commission free. It offers you partial shares. It offers you retirement account. So I will definitely be signing up for this account. I will be having a video coming up with that, and then I will begin to get it invested. So I'll be making some videos on that, and that'll be primarily set up for my wife. And that is it for this video. If you guys found that entertaining, if you also believe that M1 Finance could be one of the best apps for new investors due to the commission free, the partial shares, the no fees, the retirement accounts such as the IRA, the Roth IRA, and the ability to begin funding and having all of your money that you're willing to invest right now 100% invested, then go ahead and hit the like button below. Leave me a comment. If you are brand new to my channel or a reoccurring viewer, remember to subscribe. That really helps me out, and I really appreciate it. Thank you guys for watching, and if you liked the video, again, hit the like button below. If you have any questions or want to say hello, please leave them in the comments, and I will always reply back to you. Thank you guys for tuning in, and I will see you next time. Have a great day. Bye.